let's talk about the minutes of the Fed. It seems like it's much less optimistic about the U.S. recovery.
No question about it. Much more bleaker than anyone thought. I mean, a 6-year window for this market to recover, pretty surprising. Most people did not think they would go that far out. They were thinking maybe 3 years tops. And then possibility of another stimulus, that was off the tables for a lot of guys. To hear that, that was another thing that really disturbed the market. I mean, we had good earnings from Intel earlier this morning, not enough to keep it up when those minutes came out. Really surprised people, not, like you said, as optimistic as we had hoped to hear. Language pretty bleak, pretty strong, took the market right down.
Yep. And also, we have seen also doubts about what's going on in Europe. How do you see the situation coming along? Because we also see like ratings cuts for Portugal. What's going to come next?
Yeah, you know, again, you're 100% right. That's still weighing on our minds here. And whenever you see that currency fluctuation, that really moves the market. The market is being moved by news, but especially currency news. Anytime the euro fluctuates one way or another, it moves this market instantly. Most traders, I think the euro's got a little problem to go this summer. We don't see them out of the woods yet. I mean, they've thrown $1 trillion in stimulus, basically, in bank stimulus at this problem. Still to no avail.
So the World Cup is not going to help Spain?
You know, that was great, that World Cup. What a great finish. But, you know, unfortunately, Spain still has that high unemployment, 20%. Things are still tough over there. But I tell you, it's a turning point was that World Cup.
And also, let's go for the quarterly results. It seems like Intel and Alcoa have been reporting excellent numbers. Are we going to see other big companies having those numbers?
You know, I think we'll see great numbers. The whole 30 Dow stocks. We have 28 more to go. But unfortunately, just like Alcoa yesterday, good earnings, stocks trading now lower than it was yesterday. Intel, great earnings, knocked it out of the ballpark. Stock opened strong, trading lower than it was this morning. So I think there's no sustainability. We saw that last earnings season too. There's really little sustainability to these things. It's the news that's driving this market. It's not the earnings. The earnings have been good, but at the end of the day, it's all about unemployment. Whether it's here, in Spain, or anywhere, if people aren't working, especially in this country where it's powered by consumer spending, 70% of this economy is consumer spending. So if they're not working, they're not spending.
So this bullish rally that we have seen these couple of days, it's not going to continue. It's because there's also some analysts that says that the volume of trading, it's not supporting either this rally.
No, not at all. And if you think about before this mini rally, we were down 1,000 points in 7 days. Now we're up 700 points in 6 days. We're just spinning our wheels. It's like a car in the sand. We're spinning our wheels, going nowhere.
And we have to worry about the third quarter results because it seems that all these good numbers come from layoffs, from cutting costs, but not from better productivity.
No, you're right. I mean, I think third quarter could be a real drag on the economy. Again, productivity was strong, but it's all these layoffs going on, so they're really not doing much with this. I mean, they have a lot of cash on the sidelines, but again, a high unemployment is going to put a halt to even this. So I think you're going to see third quarter results pretty bleak.
And also, let's talk about, do you think that there's been a recovery from all those individual investors that went out during the crisis from the markets? Are they coming back at some point, or they're still like doubting a lot?
Well, you know, right now we see them doubting a lot. Our volumes are very light, like you mentioned, which is indicative of people staying on the sideline. The big funds, which are the small people, have not got involved yet. And I think there might have been a psychological change. Remember, the last 10 years, if you were in the market, you would have made nothing. It would have been a flat. But the fact is, I started down here in 1985. When I started, the Dow was at 1,400. Now, I've been through wars, through recessions, through everything, through Spain losing the soccer game a couple of times. But, you know, the Dow is now at 10,000. So even with all that, from 1,400 to 10,000, if you're in it for the long run, you're okay. If you're looking to make short turns, you got to worry about it. But I think if you're a young man with a young family getting in the market, it's the place to be.
And talking about the second quarter financial results, which is going to be the sector to look at?
Well, I still like the techs, even though Apple's getting slammed around. There may be $1 billion recall when things are said and done. But I think, like you saw today with Intel, I think the tech sector is probably one of those sectors that could survive this.
And also talking about Washington, the financial reform seems to go ahead. how is that going to affect the markets?
Well, you know, the financial reform is pretty weak. I don't think anyone's really happy with it if you're on the left or the right. So I think that is so washed out. But again, they did nothing for Fannie or Freddie, which really got us into this mess. They did nothing for too big to fail. So the two biggest problems, they turned their head and walked away on. So really, it's going to be little things that will be passed along to the consumers when, as far as banking regulation goes, but otherwise, not much done with that bill.
And just a last question, as today, what is your outlook for the U.S. economy?
I think it's going to be a bumpy road. I think you're going to see high unemployment continue. With high unemployment, it's going to affect the market. And our debt, we have such high debt, not only the feds, but the states. So, I mean, it's a problem that's going to linger here. And unfortunately, I have to agree with the Fed heads, could be 6 years.
And it's going to be another stimulus maybe? Because it seems that there's not much more room for that.
You know, stimulus doesn't work. It didn't work in the 30s with FDR. It's not going to work now. We saw with the auto stimulus, the cash for clunkers, that didn't work. Car sales are down. We saw with housing, that stimulus, when they pulled it, didn't work. I mean, housing foreclosures all-time high, sales are down. So the stimulus doesn't work, but this administration looks bent on trying to do something. I mean, if they're going to do a stimulus, I would like to see a shovel-ready jobs or things like that. They don't seem to go that route, though. So, but I think it's inevitable we'll get a stimulus.
Well, let's cross our fingers. Alan, thank you very much for being with us again. Y a nuestros televidentes no se vayan porque nosotros continuamos aquí en Visión Global, Global Vision.